It's still firmly in focus because of its enormous user base built over years of mobile mining, the ongoing debates around mainnet progress and KYC, the accessibility narrative, and the simple fact that any project with tens of millions of claimed users still draws attention even after large drawdowns. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on PI. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Pi than for lower ranked names because of its user scale, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. Here's the real debate. Is PI actually undervalued at these levels, or is this a value trap after a large post listing decline? One side points to the massive claimed user base, the accessibility of mobile mining, the potential for real world adoption if the ecosystem expands, the distance from previous highs, and the idea that a project with this many engaged users could re rate if capital rotates back into community driven or social crypto narratives. They argue that if utility grows and the network delivers on its longer term vision, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many projects that built large communities through free or low effort mining have struggled to convert that into sustained token demand once trading opened. What's going on with Pi network right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Pi Network is a mobile first cryptocurrency project that lets everyday users mine tokens through a smartphone app by contributing to a social trust network. It aims to make crypto more accessible by removing the need for expensive hardware with a focus on building a large community and eventual real world utility through its enclosed mainnet and ecosystem apps. PI is the native token of the network. It currently ranks near the top 50 by market cap, with a circulating supply in the billions and significant daily volume on major exchanges. And the price has been trading near the levels you're seeing after a sharp decline from earlier highs following its broader market listing. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached around the time of broader exchange listings. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month lows. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Volume and momentum have been soft for long stretches. Unlock and distribution dynamics have weighed on price, and the market has consistently treated PI as a lower priority name despite the size of its user claims. That's the classic trap setup. The community is real and large. The narrative of accessibility is unique, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here. Buying the huge user base will eventually matter argument, while the larger trend remains downward or sideways. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Pi Network can convert its large community into sustained demand and relative outperformance for the PI token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Nobody knows which way this resolves. The chart is still fighting the community narrative. The project continues to claim a massive user base, and the market remains selective about which social and accessibility stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher? Or are we just watching another large community token settle into a prolonged period of low relative interest while people argue about valuation? Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns. The Pi ecosystem delivers more tangible utility and activity. The large user base converts into meaningful demand, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Risks are meaningful, volatility is still present, a broader risk of move in crypto or continued rotation away from mid-cap community tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term mobile mining and mass adoption story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure microcaps but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any large community project. The narrative has to translate into real on-chain usage, real demand, and sustained relative performance. Otherwise, the token simply fades relative to the broader market.